Welcome to Black Rose's Global Macroeconomic Updates. Macroscope, July 03, 2025, United States. Let's look at the United States macroeconomics, where there were several important releases today. Starting with employment-related data, initial jobless claims came in at 233K, slightly below the forecast of 240K, and better than the previous reading of 237K. This suggests that the labour market remains relatively strong, with fewer people filing for unemployment benefits than expected. The non-farm payrolls report showed an increase of 147K jobs in June, well above the forecast of 110K and slightly above the previous month's 144K. This indicates that job growth is steady, although somewhat slower than earlier in the year. The unemployment rate dropped to 4.1%, down from 4.2% last month, signaling continued improvement in the US labour market. The average hourly earnings for June increased by 0.2% month over month, falling short of the forecasted 0.3% gain. The year-over-year increase was 3.7%, which was lower than the expected 3.9%, but still shows solid wage growth. This suggests that while wages are still rising, the pace may be slowing down. The participation rate remains steady at 62.3%, which is slightly lower than last month's 62.4%. Turning to productivity activities, starting with factory orders, which jumped by 8.2% month over month, which is a significant rebound from the previous 3.9% drop. This strong growth could signal that manufacturing activity in the US is gaining momentum, which is a positive sign for the broader economy. On the trade side, US exports totaled 279B, down from 290.6B last month. Imports were 350.5B, which was nearly the same as the previous month's 350.8B. This imbalance shows a continued trade deficit, which is a persistent issue for the US economy. The balance of trade showed a deficit of 71.5B, which was slightly worse than the forecast of 71B and the previous 60.3B. This highlights the ongoing trade imbalance in the US economy. The ISM Services PMI came in at 50.8, just above the forecast of 50.5 and an improvement over the previous 49.9. This marks a return to modest expansion in the services sector after a period of contraction, which is encouraging for the US economy, as the services sector makes up a large portion of economic activity. Subscribe for more macro updates and drop your questions below. Thanks for watching, stay informed, and see you next week.